In this video, we asked our best younger trader to explain the importance of controlled aggression for your trading. Max is an incredibly young trader, making over $3.2 million in trading profits in just his second year at the firm. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. Let's get to work on sharing how you can improve your trader psychology to grow your trading account.
I think for me, being aggressive has always meant pushing the size on trades while also being very mindful of accepting when the trade has gone wrong. So for example, if let's say I'm putting on a big swing position, this could mean that if the following day I see that it's not doing what I expect, I'm going to respect my risk limits and take off the trades quite quickly. I've noticed that anytime that I get the extra stubborn or anytime that I don't follow my trade plan, that's usually the time to where, let's say, I risk too much of my stop. So for example, a few weeks ago, kind of two polar opposite situations. One situation was where there was a trade that went really well, and I was pushing the size on a particular option trade where I was long volatility in a particular stock, and the volatility exploded, and then I was watching it very carefully, and there was like no sign that that trade was going to go wrong. I left the risk on, and the trade ended up being a very big success. Whereas on the flip side, there was a similar situation the following week where I was long volatility and also with a long bias. It was a breakout trade. So if the breakout followed through and the volume came in, it definitely would have paid off well, but the breakout stuffed and the stock was holding under 2-day VWAP. I had a put hedge, but it was still a little bit far away, and while it did cap my losses, I ended up losing too much because I didn't respect the fact that the stock was holding under 2-day, clear sign for me of failure in this situation, and in doing so, the trade lost probably 2 times what it should have. So for me, yes, there is, let's say, the 100% risk within the stop, but usually I'm trying to not risk more than 20 or 25% on one particular trade. This is kind of the way that my system works. So for me, that is my risk guardrail, and the biggest key for me is just not being stubborn and just following that trade plan to ensure that my risk reward on these large trades is always in my favor.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So for me, going for a trade and really pushing the size, I think that the biggest key for me is either to have a clear stop or point where I'm wrong, whether or not this is a hard stop or whether it is a hold below or above a key level. Or it's putting on some sort of an option structure. I've found over the last few months that incorporating options into my trading has really kept me at bay with my risk limits and really has helped me define the risk in trades so much easier, because the option will naturally give you a max loss as long as you're long options or it's some sort of a spread. And in doing so, this lets me stay within my risk limits guaranteed, while also being able to push size. I find that, especially in this kind of a market right now, there's been a lot of whipsawing action, and it's very easy to get stubborn and to hold on to a position too long, or to be convicted, and there's some news event or whatever happens, overnight momentum changes, and it's possible that you're not even able to get out because of the overnight session, and then you can just wake up and the market is going the opposite way. So finding a way where you can put a max loss, especially for swings, it could be for a break and news trade, whatever that might be. Maybe for you it's using a hard stop, maybe for me it's buying protection, whether it's calls or puts, depending on which direction I'm going. Having some way to truly define your risk is the best way to really become aggressive, rather than estimating whether your loss is and just hoping that it never gets there. So actually, a situation that was only a few days ago happened where there was a clear swing setup for me. There was volume, broke a clear level, and held over that level the entire day, but I did not end up putting on anywhere near the right size, and it was definitely very frustrating. And I think that one problem that time to time we all have, and I especially do, is I start to make excuses in my head as to why I should be putting on more or less risk, instead of just looking at the cold hard facts and the stats. And that's definitely something that I'm working on as a trader, is sticking more to my process and just clearly defining what deserves 5%, 10%, 20% of risk, whether it's intraday, swing, breaking news, whatever that might be. And I think that it is a very good reminder to really stick to that plan. And if a trade fits within your A+ setup, whether it's a certain volatility trade for options, whether it's a directional trade, whether it's a overextension, it doesn't matter. You owe it to yourself to put on that risk, and just putting a mental no or writing it out and reminding yourself that you do not put on your risk in those A+s, that could very well end up being the difference, for me or for anyone, in putting up a great month and putting up an average month. And I think that the biggest way that I try and bounce back from that is not letting that impact me mentally. So I'm not going to let myself trade poorly in the sessions ahead or going forward, such as I'm not going to allow myself to now risk twice the amount on the next trade, because I'm trying to make up for risking too little on the prior trade, or I'm not going to now force myself to be gun shy because I feel that, because I didn't put on risk there, then there's no reason why I should be putting on risk here. So really just reminding myself of the right mental attributes for trading is kind of the biggest thing for when I make this error of not putting on enough risk, so that I can go right back to plan and sticking to my process. One piece of advice that I gave a trader who was not putting on enough size was just reminding him that as a trader, it is our job to put on risk when we see the opportunity. Not everyone is bound to make mistakes, whether putting on too little or too much at times, but in the grand scheme, the reason why that we do this job is to execute on our best ideas. And if we don't do that, then there's no reason for us to do this job. If we don't have the stomach to put on risk and go for it when you really see it, then you're never going to get to a point where you truly excel. There are points throughout the year where you will look back and you'll say, that was an opportunity that made my month, made my year. That was the opportunity that got me to the point where now I could bump my risk up to a point where now I can take my game to the next level. Not putting on enough risk in trades will ultimately lead you to failing as a trader. Because if you don't know when to push your risk, how could you put the game in your favor if you're just arbitrarily putting out risk numbers? Many traders, and I would include myself in this, for the most part are maybe between 40 and 60% of a win rate. But the key is that on your best ideas, putting on extra risk, in your best ideas, letting those winners ride, or if you see that it's not going correctly, cutting them quickly. Those are key points that will allow you to overall be profitable. If on your best ideas you make, let's say, a total of 5R in 1 month, right? And then all of the other ideas you're moving around 1 or 2R. If you can identify which ones are your best ideas, then those, let's say, lesser quality trades that potentially don't work will not impact you as much as if you're clueless as to which ones are your best and which ones deserve extra risk, and then you just end up kind of flatlining or not truly making progress and developing as a trader. I think that my biggest advice for developing traders would be to push the risk in the areas that they feel most confident on. Where do you feel as though mentally you are in the game the most, you are fine putting on that risk, you are confident in your executions? These are areas where you'll be able to size up much quicker than trying to push trades that are not in your strong suit. And by doing the latter, you'll probably end up making more mistakes and scaring yourself out of putting on real risk. So for example, when I started out, this was during March of 2020, scalping, quick trades, breakdown trades, these were the style of trades that I felt very confident in because I was, for the most part, emphasizing tape reading in trades. And during this time, this was something that I found a lot of success in. So given that, I felt very comfortable in those trades and I was able to push the size in those trades. But let's say on swing trades, back then, or backside trades, I didn't have that same level of, comfort or confidence in my trades to the point where it wouldn't make sense for me to put on the same risk because I'm more likely to lose or make a mistake. And then by doing so with that larger risk, I would then just end up hurting my overall progress as a trader. But once you identify those areas where you are truly succeeding as a developing trader, that will be the biggest point for you to now get those risk bumps and develop your overall playbook, build your confidence, and at a certain point, just gotta think to yourself that especially in that first year, this is your time to prove it to yourself or to your firm that this is a job that you should be doing, and that you will succeed at. So if you're not putting on the risk and you're not showing that you are capable of great success, then at the end of the day, you're probably just not going to make it. So while that's not the forefront of what you should be thinking about, this is very much a show me kind of business. Show me that success. Show me that you are worthy of the BP that you are using. Show me that you are going to be consistent. Show me that you can push your risk and prove to be someone that should be trading when the opportunity is there, or someone else will do that. As far as the feedback that I give Team Max members, it's basically the exact same thing, such that if in their best setups they are pushing their risk and they did so responsibly and they didn't screw up their mental process or their actual trade plan, that's fine. as long as they're showing that they have edge with their trades in the long run, there are going to be trades that will lose along the way. I think that the worst thing is when I see people, let's say, down 30 or 40% of a stop, and then because they're down 30, 40%, they're like, well, I'll just lose the extra like 50% stop out, and then, they start to just act, carelessly. But I'm always for pushing risk on your absolute best setups and trying to structure the trade such that you're putting the edge in your favor. So if let's say you're trying to spot a reversal in a stock, what is the way that you have seen that you really trade well? Is it overextensions at support levels? Is it spotting the turn and then basically risking off of lows or highs? If you're putting on extra risk in those moments where you have the edge, then that's perfect, and that is your job as a trader. But if you start veering away from that and doing a strategy that is not really for you, right? So for example, if let's say you're someone that is really good at spotting turns and using hard stops, rather than someone that, let's say, likes to scale into trades and use levels and is a little bit more flexible in how they are approaching entries and exits, then you shouldn't just start doing the opposite, and you shouldn't be putting on that much risk to the point where you're going to blow yourself out in a strategy where you show no edge. For me, if many of my trades, when I'm trying to play into a bigger picture idea, will use options, and for me that will be the backstop of how I am defining my risk. So in trades where I'm not doing that, I'm not going to now suddenly just go and put 30-40% of my stop on the line in a subpar trade, or 20% or 10% or whatever that number might be for whatever the trade deserves. But if there is the setup of the year and it's worth X risk, and I'm structuring it the way that I have edge in, and then I execute it that way, whatever the result is fine. I mean, good or bad, as long as you stuck to your process. So I try to be a role model in that sense by showcasing that in areas of high edge where I have a very specific trade plan, that I'm putting on sufficient risk, and I expect them to do the same. There was a specific trade a few weeks ago where I mapped out in pre-market what a A+ look would look for myself in this particular small cap. I believe it was around maybe 2 or 3 million float. The stock has already rotated the float probably 10 or 15 times throughout the pre-market, and I told myself that if somehow the stock were to be weak off open and then trap shorts, because this was easy to borrow especially, and then regain open price and hold, that this would be a situation where I should be putting on max risk for this trade setup. In doing so, by mapping out a situation and by clearly showcasing what is the entry, what is the stop, and what do I want to see when the situation happened in the moment, it was very easy to execute and to put on a lot of risk, because from the moment of execution, I knew exactly what I had to do. Was it scale up the trade as I was proven right? Was it quickly get out because it was not doing what I expected? Or was it just sit tight? In the moment, by planning out that trade and by understanding where I would get out, it lets me put on a lot more risk rather than just figuring it out along the way. And by clearly identifying the scenarios that could happen post-execution, and by clearly putting down where I'm getting out of the trade if I'm wrong, that allows me to stay within risk limits while still being able to push size to the appropriate amount.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.